Good morning, everybody. Welcome to today's episode of Wise Tech for Wise Money. Today's episode is 40 years of institutional OTC trading excellence inside Applied Financial Solutions. Today, we're diving into the specialized world of institutional OTC trading with someone who has 40 years of experience from the biggest banks to his own boutique consultancy. Before we dive in, I'll give you some quick context. I'm Gary Wayne, founder of A1 Solutions. We partner with business leaders to help them navigate AI, automation, and strategic planning to scale their businesses. Today, I'm joined by John Beckert, founder of Applied Financial Solutions. John spent 10 years at Citi running electronic trading for over-the-counter instruments, and for the past decade, has been running his own consultancy working exclusively with banks, hedge funds, brokers and family offices. What's fascinating about AFS is their business model. They purposefully don't take ownership of any technology solutions. Instead, they operate on a performance-based revenue share, introducing clients to the right partners for the right price engines, clearing solutions, liquidity providers and trading strategies. They only get paid when their clients make money. John also runs a comprehensive strategy assessment program, taking automated trading strategies for a 12-month vetting process from 10k to 1 million plus, and institutional investments. And interestingly, family offices are their least penetrated market segment, which presents a big opportunity. Today's podcast will usually take about 40 minutes. Hope that's okay with you, John.
Yeah, that's great, Gary.
I'd like to thank you for joining me today. But before we continue, could you give us a little bit background about your journey and how you got to be setting up AFS?
Sure. Yeah, it's been a journey for sure, as everyone in the OTC markets would tell you. When I started, I actually started at AT&T and in a group called Special Markets, and that was looking for vertical market opportunities for AT&T to leverage its telephony and computing, and got into it. Formed a joint venture with a company called Telerate that no longer exists today, and we basically created the first electronic dealing system for over-the-counter markets, where of course there is no exchange, so it's all bilateral based. And, I led GTSCO and then got recruited by Citi to, among other things, form the next generation of that electronic trading system, which went through a few different products but ended up as EBS. We eventually sold that to the top 17 banks in the world, I believe it was, calling it the EBS Partnership, and I worked for that for a while. And then evolved into some technology firms supporting over-the-counter instrument trading. A company called Cognitech back in the day did the first internet-based FX trading platform. And then they got acquired through my facilitation to First Derivatives, and that really focuses on price engines and risk management technology for the top market-making firms in the world. And so it's been a mix of banking and technology, but the common denominator has been trading. And so about 10 years ago, I formed AFS. It's a very hands-on consulting firm. It's not, PowerPoints and the like, or strategic. It's got an element of strategic, but it's more hands-on. So you mentioned some of the areas we cover. We started out with trading relationships, introducing market makers to market takers and vice versa, and many of the relationships ended up being reciprocal because firms have strength in one area but need help in another. And that migrated to, as we became enmeshed in that kind of workflow, introducing clearing solutions. So, we would find brokers, for example, that might have capital deposited at, 15 different market makers into them. And so we introduce them to a tier 2 prime or prime that would be able to consolidate their capital in much better terms and much more efficient operations. Technology components, everything from price engines and risk management, and basically all the things, Gary, that the CEO of a trading firm would need to consider. So we basically, who are you and what do you want to be when you grow up, type of a conversation to profile out what they're regulated to do, what they're currently doing now, and ways that they could enhance themselves, whether it's fix problems, whether it's scale, very profitable and strong areas of the business. And typically we try to get it into short, bursty projects that are executable and definable, and then grow from success as we make adjustments with the client along the way. We introduce, once we define a solution or an opportunity area, we'll introduce what we term service provider partners. And these are companies that deliver some kind of, could be market making, it could be a technology component, but we have a number of these service providers continuously adding them. Basically, those firms get introduced as they fit into a particular solution, and then AFS will provide overall project management to make sure these new relationships come together and execute well through the back end. And as you say, we don't get paid until the client is generating net revenue off the back of those introduced projects. We find it works really well. It keeps everybody focused on what's important and actually executing it through. Because as we all know, you could have a good idea, but if it can't be executed or isn't executed, it doesn't count. Sure. So it definitely has been a model that works well for us. We have our AFS service providers around the world. These are typically people that have experience with one of the over-the-counter markets. And while my background started in FX, we're now in, for example, we've entered crypto and involved with that. It's not only FX and precious metals and CFDs and NDFs, but again, it's even the equity markets in terms of the indices, and that really got pulled in through the strategies, which we could talk about in a minute. But it's basically, striving to help a firm in the terms that we find it in and where those opportunities are to make a difference, and then getting paid based on actual results where they generate money and then we get 10% of that generated net revenue. So it's a very effective solution. We share with our AFS consultants. They get 50% of whatever AFS collects. So if they introduce or get involved in projects and the money flows in, they proportionately benefit, handsomely. And as a result of that, as a result of the model, I attribute it that almost our entire business has been referral. And so our AFS consultants come to us through referral. Our clients, our service providers, everyone comes in through referral. I don't think we've made a cold call. I certainly haven't in the 10 years that 10 plus years we've been operating. So yeah, that's a bit of the background, and I guess it gets into the AFS model, Gary.
Yeah, I'm interested to know. I mean, obviously you're at Citibank for 10 years doing, trading platforms, etc. Was that mainly FX or?
That was mainly FX and precious metals.
So
at that point, but back then when dinosaurs roamed the earth, Gary, they didn't have things like crypto.
No, I mean, I remember telling rate. I remember all the things you're talking about. But what interests me is how you started AFS and how you've managed to organise it in such a way that you're able to offer all these services without marketing yourself.
Yeah, it's to do.
That's what I'd love to understand.
It's to do with the model, and the model, because it's performance based. you get performance-oriented individuals coming in. And because it's performance-based, a lot of people are much more, less apprehensive about trying a new company, a new relationship, a new solution, because if it doesn't work, it's really on AFS. We don't get, any kind of remuneration if it doesn't generate net revenue for the client. So it's a risk-free. It de-risks the decision to work with a new firm and to execute new projects. The onus is on AFS to really vet through and say, can we deliver this solution in a way that's going to generate tangible benefit for the target client? And I think, and then sharing in that benefit. So, we don't have to have motivational PowerPoints and other factors. We have to just put together very logical and coherent plans. And, typically the market and OTC, they all talk with each other every day just to do business, right? One bank's providing pricing to another bank, and another bank's providing, some sort of a service to a broker. And so the market talks every day. It's unique in that way to other markets, such as the equity market, where everyone points into an exchange.
Sure.
And
How does it operate though? So, just for example, I'm trading OTC. AFS is out there. I hear about AFS. Do you have a research department that puts all these ideas and strategies together?
Well, we do have a fairly extensive internal database. And what we do is we profile all of our clients and service providers in terms of their capabilities, from very detailed activities such as who their clearing partners are, how do they clear? Because if we match up two, institutions that use the same prime broker, it's going to be a one-way, clearing, which reduces the cost and complexities, etc. Where they could have gotten that pricing through a common clearer, as opposed to at the other end of the spectrum a four-way give up, where you've got two completely different PBs and they come up through different paths. It's subtleties, but sometimes these subtleties, add or reduce, costs to the deal ticket, and other efficiencies. And that's just one kind of esoteric example. But what's each person's connectivity options, and is there a common option that both parties have, which enables them to connect, and is that option cost effective? Meaning some options are cheaper to execute trades than others. And so all these things get looked at when we come up. Let's say a bank or a broker wants to provide its pricing to other downstream tier 2 or 3 brokers. We would look at these factors and determine, okay, let's start with these 10 introductions where you could put your pricing into these 10 different target, let's say, broker platforms, and thus provide your liquidity most effectively, most efficiently. Now, there's a whole process that goes on where we contact both people ahead of time and vet through, so that when these guys get on the phone, after like a typically half-hour, 45-minute call, a vast majority of the time, over 95% of the time, it'll end in an agreement to do business and the initiation of a project plan to onboard those feeds and start that trading activity. And I think that's one of the things that's very attractive to these big firms, is that there aren't many false starts, because again, AFS doesn't get paid for false starts.
Sure.
And so it's a very efficient, effective way that looks at the details, the pertinent details, to line up these relationships. So we send them mails in advance to say, okay, broker A has this kind of clearing and connectivity and data center and all the other factors that are important, and broker B has this set, and here's where the overlap is, here's the suggested solution, of how to connect and get together and execute that first trade. So it becomes very efficient for them to find see the forest through the trees and be able to find the right trees, I guess, to plug into very effectively and efficiently, because all that research would have already been done. And so that's one example, when it comes to bilateral trading agreements. But a similar approach is adapted for the other segments, whether it's, picking a technology component or a clearing partner or, whatever the case may be.
When your actual clients, you said you've never made a cold call. So do the actual clients come via the associates?
They typically come, we have another, you draw out a very important point. So most of our clients also become service provider partners, because in serving them, we learn a lot about them, obviously, and they typically have some capability somewhere that they could provide to some segment of the market, perhaps further downstream from them. And so they wear many hats. They are a client, they're a service provider. But the other thing is, if our clients or service providers introduce us, we treat them like consultants and we give them half of whatever we collect. So it's a very unilateral, win-win in all directions type of a market. And we prefer to make, perhaps a smaller amount in the grand scheme, but on a much bigger volume set with more people. And the more people involved, the bigger our asset is, because our asset is the firms that we're working with, and having those firms help the client. So we're looking for that very collegiate, compatible, high trust network of, very willing participants to get involved in a particular client solution and to give it a lot of goodwill and benefit of the doubt to really bend over to make it work. I mean, not to the point where they lose money or other factors, but you see a lot of goodwill throughout the network and a lot of confidence in the people that are brought to bear. So they'll share a good deal of information and they'll apply themselves pretty capably to these solutions, because they know they get it back in one form or another.
When we first spoke, you said you created this business to be a lifestyle business.
Yeah, I didn't get that right. I did. I stepped out of a lot.
How did it spiral so quickly?
I stepped out of a career where there was a lot of international travel, and there was a lot of commuting in and out of Manhattan, to the point where I was living there during the week for a period. And, with other interests in life, I said, I love what I'm doing and I love the people I'm doing it with, but the dimmer switched down a bit. So it's a bit less, 12-hour days and travel and etc. And I started the consulting business because I knew a lot of guys in the market. And it's interesting. The model itself about, performance driven, paid on performance, it just, as discussed earlier, spurred tremendous participation, and a lot of guys, got involved with it. And at one point, I figured, I need to get some more guys in, because, to shoulder some of the work, some of the scaling that's occurring. And of course, I bring in guys that are very oriented to generating more business. So it was like putting out fire with gasoline, and it just grew on itself, to be honest. And I just, these days, I just try to make sure that the scaling is being done in a way that we can maintain the quality, maintain the relationships, and maintain the backup of, things as discussed, like the database and other factors, because scaling is a very difficult part of the story for AFS to manage each day. And so even though I touch less specific situations each day, I find myself, applying myself as hard as ever. So it's been an organic growth by the people that have elected to get involved. And I've kind of
How many people involved in AFS?
So we've got, and I don't think of them as numbers, but I think the last time I checked, I think there's about 65 consultants around the world. And then we have, triple digit now clients, and probably approaching that in terms of service providers. But then when you count the clients that are also service providers, that's a triple digit number. So it's scaled out, which sounds great until you've got to deal with it each day. And that's really the challenge, is making sure that we maintain the quality. Because again, everything is performance based.
Sure. You mentioned you've actually put a formal succession plan in place. How would
I
that?
have, yeah, I have. I'm not, well, only God knows, but I've not, planned a exit myself yet. But I have put the things, the necessary documents and everything else in place that as I want to exit, everything goes on. And because it's so communal, once you got past figuring out that model and how it'll all work together, it's really no big deal. Because as I say, I'm just one component of something that's a lot bigger than me.
Sure. So just talk me through the process again. If a hedge fund or broker comes to you, what's the actual consultation process? How does it actually take shape?
Well, in the space of an hour, if you ask the right questions, it's the old 80-20, 90-10 rule. We can come to a pretty deep understanding of that, whatever you want to call them, broker, hedge fund, doesn't matter. But by asking them about the connectivity and the clearing and the registrations and where they operate in terms of data centers, and, in an hour, you can really understand them at a level sufficient to start coming up with their logical areas where they could improve and scale and save money and make money. And so, off the back of that first meeting, we'll start profiling them in the database, and we'll start creating a solution for them, actually sets of solutions. And then we'll get alignment on where to start, and we will start running that through our process and identifying who we need to introduce them to, what next steps we need to perform in order to start going down that, I'll call it the project plan path, to executing that particular area of activity. And typically we like short bursty projects because we like to learn, see what went right, what could have been done better or differently, and then incorporate that into the next, bursty project. And that typically works extremely well.
So if I was a consultant, just for example, how would I get involved? How would I get my business or get involved with the AFS business? Would I bring a business deal to you and ask for a solution, or say, how do we get this solution? Or would you pick a consultant that you thought fitted the need?
It can happen. You can come in through one of our consultants. You can come in through one of our service providers. You can come in through one of our clients. So there's multiple ways that you can find us, or people find you and recommend them to us. And, there is certainly if you come to me, I would, initiate the process of, the discussion as we're having now about what AFS is about and how it works. And if that all vetted out correctly, we give you a AFS consulting agreement. It's a Fisher Price, very brief, not meant to be legally elegant type of an agreement. And it lays out in English, very clearly all the attributes of being the consultant or service provider, client. They all have agreements, and they all have within their agreements crossovers into the other agreements, as we discussed before. A client can become a service provider. A client, in a sense, can become a consultant by introductions and getting remunerated, through that. So it's really an organic process, and by virtue of this podcast, you in fact are acting, as an agent, so they would come to you, or come to me directly, but probably come through you, and be introduced in, and we would process all of the interests as they apply.
Yeah, it's interesting because I spoke to a similar company, not in your field, but I spoke to a guy based out of Canada. You know, been around a long time, very experienced man, not in the markets, but he runs something very similar to you in strategy-wise. You know, he does a lot of M&A and turnarounds and, you know, helps companies either exit or basically, get themselves back on their feet. And he doesn't have a business, i.e. GW Limited as such, but what he has is 200 consultants plus, and they're all independent, but they come to him for his expertise.
Right.
So when they get a deal that they can't quite manage on their own, they come to his business, to his company, and they say, look, I've got this deal, I can only get so far. I need your help and input to actually get it through the finish line.
Right.
Then we work together to get that done. And then obviously there's a deal talked about, and but it's not dissimilar to what you're doing in a way.
Yeah, it's that ability to come in with the industry expertise, and in fact, we solve the same problem across many different countries, regulations, technology setups. So we've seen that problem A, if you will, from many different angles and many different times. And we can come into a shop that's already doing that function, but add a tremendous depth and breadth of resource capability, of introductions and expertise to accelerate through that and to get it more right, quicker and cheaper. And it's the general concept or the general framework of it, I'm sure can be applied to almost any industry.
Sure. You mentioned you work with price engines, risk management systems, clearing solutions, liquidity providers. There's a lot of specialised areas. How do you maintain that network and ensure you're always introducing the best partners?
Yeah, that's a great question. So all of the guys have come from a career of being in the OTC markets. Some of them have come from having extensive, I'll call it front office contacts out to other institutions. Others come at it from more of a back office where they're very familiar with the technology and the developments, and through working for a smaller company like AFS where you're getting your hands dirty, probably up to your eyeballs dirty, every day in the midst of it, you're forced to stay very much abreast. And you're talking to so many people who are trying it from different angles that you're forced to stay, from a hands-on perspective, very much abreast of the various aspects of doing a particular activity, whether it's clearing or price engines. And because of the organic style, and you touched on a very important point, we typically have multiple different, for example, price engines or multiple different clearing partners because one size doesn't fit all. So if we've got a tier 2 broker and we see he's got collateral across 15 market makers, he doesn't have the balance sheet to get a tier 1 bank PB. It's just the wrong size fit. They wouldn't have him, and they shouldn't, and he wouldn't want them because it's like an elephant. They'd roll over and crush him and not even know he was there. So what he needs is a tier 2 prime of prime, because that's going to fit it's better than what he's doing, and it's achievable. It's the next rung on the ladder for scaling that franchise. And it's being able to see all the different layers of the market and the partners. Not typically, in some cases when we're introducing trading relationships, it'll be, a tier 1 bank pricing a tier 1 broker or a tier 2 broker. But sometimes it could be, 2 tier 1 banks pricing each other, or 2, tier 3 brokers pricing each other. And they all have different dynamics. Equals tend to be more reciprocal, And when it's downstream, you have a maker and a taker type of a situation. It's all liquidity provisioning, but it has different angles to it depending on where in the food chain you're connecting the dots and what the needs are. Sometimes it's very localized. I need gold pricing. I need gold pricing, but for retail in very small amounts. Well, we know you got to have Netlink or something similar if you're going to provide, to very small amount trades, because otherwise the deal ticket costs would eat you alive. It'd be, more cost than it would be revenue coming in per trade. So there's some very basic things that they seem like, very small details until you get involved in actually making it work, and then they become critical. And it is a huge Rubik's Cube, but we've got the people that have got, and we've got the service provider partners that have got the knowledge that is shared, because everyone wants it to win, right? It's one of these things that each project we create is a unilateral win situation where everybody involved from their respective angles, whether it be the guy providing the product or service, to the guy receiving it, to AFS, to the person who introduced it, everybody is winning based on the same result. And everyone's got a lot. It's basically bringing the world resources together in a process or a framework that allows a very cooperative type of information and domain knowledge sharing.
You said you only work with institutional clients, banks, hedge funds, brokers, family offices. Why that hard line?
It's two different segments, and I guess it's that great American philosopher Dirty Harry says a man has to know his limitations. And so, the world is big enough for us now. I mean, we could obviously work with some of these institutions that don't trade OTC. We could work with, high net worth or retail clients, but we've drawn the line in the sand. A lot of times when you get into that lower market, you're working with the clients of our clients. And that again creates a conflict. We don't take on any of our own asset. We don't provide our own products and services because we don't want to compete or compromise the integrity of the pure consulting. We're always focused on what is best for you specifically in the situation you're in now. And, if we were you, what would we do to save costs, make more money, etc.? And once we start owning our own competing elements, and we've had many, many offers, it compromises the integrity of what we're trying to do. And I think it would affect that organic culture that feels very free to recommend their friends and others into us for whatever capacity, client, service provider, or consulting role that may fit. And that's the thing that's really allowed the business to scale organically, sort of whether I wanted it to or not.
I mean, some of your client relationships have spanned 10 years plus.
Oh yeah. Well, some of them pre-exist AFS, so they go back in certain cases to, Citibank or, First Derivatives or whichever company I came from. So some of them go back 20 or 30 years. But yeah, certainly with AFS, some of our initial, the vast majority of our initial clients are with us today. And it's just scaled out from there. So
how have you kept them? In such a fast-moving environment, not a lot of people keep their clients that long.
Well, it's interesting. We keep them because hopefully they get confidence that we'll have that efficient, reliable delivery of things that they need. So when they have problems or opportunities, they'll come to us to either help them, get started in that area or to scale what they're doing in that area. And so in a sense where, and again, the pay for performance de-risks, bringing us in to help them. And so it's become very natural for them. And typically when you start introducing, trading relationships, for example, well, that goes on forever for these firms. And, as they evolve their needs, whether it be, as we talked about before, credit or technology, all of those pieces are constantly evolving to keep up. And again, it's a constant source of change that's needed to stay competitive with the world.
No. Well, one part of your business focuses on automated and semi-automated trading strategies, I think,
Yeah.
for FX, precious metal indices, CFDs. What exactly are these strategies? I mean, I know you can't give me the individual ones, but just an overview.
Sure. It's very interesting in the sense that we started this segment of the business a couple years ago at the behest of some of our clients, funds, proprietary trading firms, and others. Some of them are investors, if you will. Others, are the trading groups. And then there's brokers, and that was a subset of the world we were already working with. And so what we've done is set up an assessment network with those three stakeholder groups: investors, institutional investors, I should emphasize, traders, and brokers, being the custodian that'll hold capital and have the liquidity to support the price execution and the reporting of the trade activity. And what we found is, again, from an industry consortium perspective, we ended up developing a process that mimicked what these large funds and asset managers and others would do for internally developed strategies. So in our case, we have people that'll scan the world and identify them, high potential guys. The ones that pass that process go into a small investment assessment that lasts for about 3 months. And again, we have quant teams from the investor, sometimes from certainly trading support from the broker and the trading teams, and we work with them to vet that through so we know what the optimal setups for the strategy are and how to administer it and get all the bugs out and see how it performs. And if it passes the assessment over that 3-month period, we move it into the first scaling period, where we increase the capital to, say, 250,000, and it tests, is there enough liquidity at the top of the book in the broker we have it running at? Is there, what other attributes can cause problems with scaling, the problem of success? And we'll run that first scaling for 3 months, and then there'll be 2 subsequent scalings as it passes each scaling phase, and eventually it gets it up to 1 million by the end of a year. And at that point, it's deemed ready to go into the formal internal portfolios of the funds, the asset managers, etc. And, these folks are looking for, in our world, something very consistent, steady, well risk managed, and able to be a minimum 3 to 5 year partner at a minimum of 1 million, capital under management to get into those portfolios. And it's become a very exciting segment of our business.
So that these tiers are basically, 250 to 500 to 750 to a mil. They're
Yeah.
just to allow you to test the strategy and liquidity.
Yeah. And for many firms, it would mimic what they're doing. So if a given fund, had the capacity to maybe test 2 or 3 strategies a year, working with us, this will give them the ability to test maybe 50 to 60 strategies a year, because they won't test all of them themselves. We will arrange for them to test, and it's back to being fairly collegiate. Once a strategy passes the 3-month assessment, supported by one investor, we'll typically bring in other investors that can join them at that 250K scaling level. By the time they get to 1 million, you could have many investors looking at that and participating, including that in their various portfolios. It's not a zero-sum game type thing. It's a collaborative effort where they all win together through industry efficiencies. All they want is the best strategies in their portfolio. They don't really care anymore, for the most part, how they get there, whether they're internally developed, whether they're third party, whether they found them, whether someone else brought them to them. As long as they're the best and they're able to, generate the best results for the firm, that's what points them all to participate in this kind of a network. And it's very interesting.
You made a point of saying this isn't a get rich quick scheme. It's institutional, careful and cautious. Why is that distinction so important? And what's the typical return profile? You said investors mirror.
That's a great question. Yeah, it's these guys that are running very big, I'll say very heavily regulated firms. They want to be able to sleep at night knowing that something's not going to blow them up overnight. So we have, automated cutoffs put in for maximum drawdowns that we have applied for every single strategy, so it could lose no more than 10% of its peak to trough, high watermark revenues. So it's very, the risk management is first and foremost with the institutions. In retail, it's a different matter. It's a whole different segment, but we don't really deal with that specifically. It's more 10% drawdown is typically the max drawdown that a lot of these firms will set it at, but it depends on strategy and firm, investor, etc. But typically 10% would be a pretty good benchmark of max drawdown. And I typically look, what I call the 2.5x rule. Annualized returns over max drawdown, I would typically look. So if you had a 10% drawdown, I'd want to see a 25% annualized return. Now, there's exceptions and there's variations, but it's a simple rule that I use as a back-of-the-mind benchmark.
You said investors can analyse 150 to 200 strategies a year through your program?
Yeah, when I say that, I'm saying they will be able to, look at the results that are being generated across different investors, different brokers, and they'll be able to say, gee, I'd like to try this one or that one. And then, they may start their own abbreviated path where they watch it trade and accelerate the investments to their own liking. But we have our own generic. Before we're going to recommend strategies for scalable investment, it's gone through a process.
For people listening that aren't so familiar with the OTC market, etc., and a lot of people aren't, what makes the trading so specialised? Why does it require this level of boutique expertise?
The trading in OTC is a precision game. When you point at an exchange, everybody's aiming at the same price for that particular stock. When you're, trying to execute a foreign exchange, for example, deal or precious metals or something, you're in a sense creating your own pricing between that bilateral pair. And so you're taking that on, and the risk is really that specific trade being added to your book. And so we look at things like decay rates, like how fast, when you accept the order into your book, does it turn negative in the market? And, is there enough time for you to risk manage it in that interval? And it gets to be in a very rapid moving market, it gets to be precision and minor details become critical. And so there's a lot of liquidity management aspects and risk management aspects that would take a long time to even discuss at a moderately high level.
Yeah, fantastic. I love the OTC markets personally, compared to exchanges, etc. You mentioned family offices are your least penetrated market segment.
Yeah, we started with the tier 1, 2, 3 kind of funds and asset managers, proprietary trading firms. I think it dates back to other projects that we started with them before we got into the strategies business. And then they drove us into that strategies business. They drove us into the strategies business. So it was more of an evolution than a selection. But we know that those family offices need really proper, well risk managed strategies for the long pull, just like the others in the different segments.
If someone wanted to bring in family offices or hedge fund? What's the criteria?
Well, they introduce it in. Excuse me 1 second. As you can see, I'm
You're a
bleeding
busy
into the
man.
next. Yeah. But, it would be an introduction, and we would take them through the same process of understanding their profile, their needs, their opportunity, and working with them in the same way, getting them into the database. We have what we call tear sheets that we provide on each strategy. So we would show them the tear sheets. They're one-pagers that cover everything that's critical to know, from what kind of instruments, because certain family offices might not be able to invest in crypto, for example, or maybe they can't invest in CFDs because of their geography and regulation. So there's a lot of things to consider. It's not just the one that generates the most profit or the one that has the least risk. There's a lot of factors, and we would talk through those. And then they would select those strategies. We would introduce them to the traders and onboard them, whether it's in their own environment or in a third-party broker where they would tap in and configure it together.
Over the last 40 years, you've seen massive technology evolution. Yeah, I mean, obviously, I remember 40 years ago when there was no computers, no open boxes,
No
no
internet,
dealing platforms, just telephones.
no internet, and no cell phones.
Yeah. I mean, what innovations now that you see do you find exciting? Where do you see AI and automation?
Well, we're
if
seeing
anything,
AI
playing a
crop
role?
into it. Yeah, we're seeing AI crop in throughout the whole food chain. Some of it's more preliminary and some of it's more advanced. Ironically, and I'm not sure if this is statistically borne out or if it's more my observations and instincts, but I see a lot of it coming into the strategies. And I think those guys are very model driven to start with, and they're now injecting AI. Like, for example, we have strategies that'll have 15 different strategies running under one hub of AI. And as the market shifts, some strategies will fade, some others will come on stronger in that condition, that market condition, and it'll move capital between the ones that are coming on away from the ones that are fading. And it'll some of them change the setups. They may change leverage on the fly, or they'll change average trade size or other parameters to try to configure the portfolio of very different strategies to conform and optimize to a particular period of the day in the market, to try to optimize this portfolio of trading strategies that trade different instruments, that have different methodologies to them. One might be a scalping strategy, another one might be a trend following or day trading strategy. So you'll have these configuration of very different things, but the portfolio, when optimized for the market condition, ends up reducing risk and generating a more consistent and typically higher profit level. So I see AI coming in there as an example.
Looking ahead 5 or 10 years as your younger team takes over and you go into a retirement, as you said you wanted to eventually. How do you see AFS evolving, and how do you want to see it evolve?
I would love to see it evolve exactly as it started, meaning it could grow bigger, but the framework that's got us to this point, I don't think gets old. So the basic tenets of what's created in organic growth with people coming in because they really are motivated and can contribute, and all of our partners, that unilateral success based on the same criteria, the ability to expand into other either asset classes or functions or geographies. It's like a Rubik's Cube, so it does expand in all directions as the opportunities present themselves. So it's a very flexible, scalable environment and framework. I think, as far as I can see, it's going to be more of the same within that process or that framework. It's, as you say, it's just making sure that these younger guys have that same ethos, with regard to quality and care of the client, and willingness to try new things, to be creative, and to take on new partners that are going to have new capabilities. So we're now starting to take on AI partners, which is something I wouldn't have even thought about, back in the day. Didn't exist.
I have to ask you a question because I see your passion. And AFS has a lot of partners, a lot of consultants, but you are AFS. Do you really think you're going to step away?
Well, that's a good question. After carefully examining my options, the other option is to die at the desk.
I don't
So
think you'll do that, but this is your baby.
I think it's more like a dimmer switch.
Yeah,
It's not a question of retiring. It's a question of just continuously repositioning. We've got a great team of people, and more importantly, a great team of clients and providers and consultants and all. So it's really no longer about me as much. It's more about evolving the process to a point where it doesn't notice when I'm not there. And I think when that day eventually comes, I don't think there'll be a flinch. I don't think there'll be maybe there might be like a little pub celebration somewhere, hopefully, but
I
that,
think
that's
that's
about, yeah, that's about the
I
limits of
think
it.
that's just good management, though, isn't it?
It's
You're
become
just
vitally
creating good
important
structure,
because
good management.
a lot of people really count on what we're doing from their various perspectives. And so you don't want to leave your business friends that, very
Yeah,
often
of
very
course.
deep relationships, in a lurch. And so, like planning their projects, whether, whatever activity it is, this macro plan is probably the most important thing. And I think, while hopefully it's probably maybe in terms of small numbers, years away, it is going to be an evolution, and you want to make sure you manage that gracefully to its completion, if you will.
Before we wrap up, I'd just like to ask what advice you would give to someone or a company trying to break into institutional trading consulting.
It's interesting. I think you have to pick your starting point so that you have a critical mass of domain expertise and resource and capability to do a really good job at something. And I think once you build the confidence amidst a smaller focused network of participants, you grow from there. So confidence and momentum beget momentum, and you organically scale based on success and word of mouth. Because again, in the OTC markets, if that's the context of your question, everybody talks with everybody, and
Sure.
that can be good and bad.
It's a small world, actually, isn't it?
It's a small world, and if you stay on top of it, it's a good thing that it all talks, because you can pull it together much quicker, because a lot of the people you pull together aren't complete strangers. They just didn't work with each other in the capacity that you're focusing them on.
Yeah, it's a small world. I interview a lot of people, and it's amazing how we all come. A lot more of the people I talk to all come from the same industry, done similar things. We've crossed over at different times, but we didn't know each other. It's interesting. For listeners who have connections to family offices, hedge funds, or brokers and might be interested in learning more about AFS or exploring consultant partnerships, what's the best way to reach you? And is there anything else you'd like to share about AFS or opportunities that you're seeing in the market right now?
Well, I guess the best way is either through you, and I will make sure that you get you probably already have my email, my cell number. We have WhatsApp, we have a lot of different applications. So I can provide you with all of that contact information, and then they could contact either me or I'll, distribute it out to people in the organization that deal with this, and we'll jump on a call and we'll chat with those folks. And again, you got to start. It's kind of like a patient in a doctor's office. Each one's different. You can't prescribe what you gave to the last guy. You really got to look at each person and figure out what makes them tick and what the best way to proceed is.
All right, John, that's fantastic. Well, don't go away for a minute. I just need to sign off by telling everybody that it's been a pleasure having you here. We've learned a lot. I've learned a lot. It's amazing to see what goes on in the financial markets and how people interact with each other and what services they provide. Sometimes you're just not aware of them until you have these conversations. In saying that, you can contact me on LinkedIn or on my email at gary@a1solutions.com or via my website, which is www.a1solutionsinternational.com. Once again, John, really enjoyed today. Thanks for being on. You've been a great guest and it's been very, very insightful.
Great. Thanks much, Gary. My pleasure. See you soon.
Cheers.
Cheers.